Hello everyone, welcome back to the channel Mastering Options Trading. So let's quickly review what we expected for today and how did the market behave, right? So so I mentioned that data is double-sided, indicating a double-sided momentum. So any gap up will also lead to fall. And the resistances level that I had given was 24,390 to 24,410, right? So you can go back and check yesterday's video. Exactly at 24,401, it made high twice, right? At 401, right? And also this was the first indication that market can reverse. Either you could have entered here or on the confirmation of these three candles, right? Like a evening star, basically bullish candle, doji, and then a bearish candle. So clearly it indicated a bearish trade at the resistance level, and because the data indicated double-sided momentum, we could capture this down move. The happiness is not just me capturing the levels; it's about all the webinar participants who could do it. So clearly you can see nothing complicated here. Simple technique that we use on a 15-minute chart. So people were able to capture. Same thing here. I mentioned, you can see the accuracy. This is all from different groups. This was for Bank Nifty, and yeah, great levels as you can see, right? So it's nothing very complicated. Every day you can see it in live, right? It's not like I'm showing some screenshots and making you believe, but it's clearly that in the previous day itself, I would have mentioned the key levels, right? Now, what is important is out of 17 trading days, 16 times it has opened a gap up, right? Even today it was a gap up. So one fine day it will open a gap down. It could be a big gap down as well. And whenever that happens, it could lead to sudden panic or profit booking, right? Panic doesn't mean Nifty will fall 3-4% and all, but it would fall like more than 100, or 200 points kind of a fall is possible because Nifty has been continuously moving upside without any uh, even a decent pullback also, right? So this up move cannot sustain too long. At some point, a minor pullback, at least a minor pullback has to come. So if you're on longs, you ensure that you are hedged properly, right? Now, starting with the analysis for tomorrow, index futures, retailers are going on adding shorts and FIs are going on adding longs. Not sure when is this bubble going to burst, but it's definitely not sustainable. 4 lakh longs any day, the profit booking can come. Again, I'm not saying go bearish just by looking at this, but have your longs hedged, right? But what is the view for tomorrow? We'll look at the options data. Index calls, retailers have further shorted calls, right? So that is a bullish sign because you have analyzed the opposite of it. FIs have added call longs, so bullish, but pros have reduced their call longs, so it is bearish. But 2 out of 3 are indicating bullishness. In terms of puts, retailers have added the put shorts as well, and FIs have added put longs. So if you observe carefully, retailers are adding call shorts and put shorts. FIs are buying calls as well as puts, right? And pros have reduced um, the call longs, but here it is somewhat flat, just 6,000 change. But this data is indicating bearishness. So again, it's indicating a possible double-sided momentum. However, as of now, Gift Nifty is indicating, I think, 40 or 50 points gap down. So how to trade, I will show you in a moment, right? So let's look at the levels. For tomorrow, the levels are going to be important. Yeah, and before that, I mentioned in the thumbnail as well, right? So the webinar participants again who will clearly know looking at this call segment, call side basically, where the big player activity is there. So clearly you can see where and all it is there, right? And what is the criteria to find out. One important thing is I observed this week's option chain as well. So there has been some unwinding. So it's not that all of that you see here is big player activity. Some of them, I mean, all of them are big player activity, but some of them are carry forward. But majority of them looks like fresh positions to me, right? Will not go into much detail, but how to predict using that big player activity, whether it's going to be bearish or bullish, whether these are call shorts or call longs, right? So what I plan to do is simply for tomorrow, I will mark this as the important resistance, right? If the market goes above this level, then I will consider that those are call longs and we should be on bullish side. but as long as it is below 24,360, right, it is bearish sign. Now we are at 24,302. In case of a flat opening also, we'll get a 50-60 points as a stop loss, and then I will look for a bearish trade. In case it opens around 24,350 kind of levels, I will have just 10-20 points as my stop loss, right? And also I mentioned that market is not going to close below, is not going to close above 24,310, right, which is the hanging man patterns high, yesterday's high, right? It did not close above yesterday's high. So I'm still continuing to hold my short positions. So I had entered them at 24,140, and I'm very confident about 24,140 and below levels will be tested. The point here is I am having the month-end expiry positions, and that is the reason I want to hold it longer and not give stop loss unnecessarily to the market. However, if it crosses 24,360 or 24,400, I will make on the spot decision probably to exit. As of now, the option premiums are I think 50-55 rupees above the levels that I have sold. So it is in loss as of now, but I will continue to hold. And I'm very confident that 24,140 and below levels will be seen sooner, right? Now, important levels for tomorrow. If you want to initiate bearish trade, I think below 24,295, it looks attractive to me. Again, no recommendation, just an analysis thing. So below 24,295, I will look for 24,237, 24,150, and finally 24,060. So three key levels, but I will wait for 24,295 to be broken. Otherwise, I will not take a bearish trade immediately. The fresh bearish trade, right? And about 24,360, it is a bullish territory. It will very likely break 24,400 as well, right? And coming on to the Bank Nifty levels, so 53,220, similar level as drawn yesterday, and 53,360 will act as the key resistances. Support will come at 52,930 and 52,810. By any chance, if Bank Nifty breaks 52,810, then clearly 50 to 160 will be the target. How? Because if you can visualize here, this looks like an M pattern, right? I'll show you on the line chart. Maybe it looks better. Yeah. If you see here, from here, once this neckline is broken, actually this is the neckline 50 to 850, but we'll take 50 to 810 because of the candlestick charts. Once this is broken, it will clearly lead to a big fall, and 50 to 160 kind of levels will be seen. First key level will be 50 to 485 because of the low of this week, and then this particular gap. This is not a gap on a daily chart, so yeah, but it will come till here is the expectation. Now, just to summarize, data is indicating a double-sided momentum, and but I will look for a bearish trade, especially if it breaks 24,295. Then I'm expecting first target of 24,150, 160 kind of levels. Right? I hope this video is helpful. One important thing: tomorrow is the last date for webinar registration. So if you are interested, you can join. You will get the WhatsApp number on the channel description. Please do like, share, and comment. Thank you all. Have a good day.